Well, hello there, and welcome to yet another episode of Ask Dr. Bitcoin. Today, we're going to talk about something called the Techno Capital Machine, which is a funding framework that has been designed by the guys working on the Morpheus AI project. We've talked about them a little bit on the show before. So we're going to discuss what it is and how you can use it to fund your next open source or DAO project. Stay with us. So let's break down the Techno Capital Machine concept with a more digestible format for a Web3 degen. That is to say, someone who's familiar with using MetaMask and navigating the Web3 space, but maybe not so deeply technical as they're writing their own smart contracts. First of all, what is this? It is staking for open source projects. Think of TCM as a new way to support an open source project, like these cool new dApps or Ethereum-based tools that you like. Instead of just donating money or investing money for tokens like in an ICO, your Ethereum in the form of staked Ethereum is basically Ethereum that you've locked up to earn rewards. This yield allocation of your Ethereum that you stake will allow you to fund the project. The Ethereum you stake will earn rewards in much like interest in a bank account. With TCM, you're directing these rewards towards funding open source projects that you believe in or find cool. It's like saying, hey, I like this project, take my earnings and help it grow. You get tokens in return for this. In exchange for backing these projects with your staking rewards, you get to share the project's own tokens. Now, this is neat because if the project does well, those tokens could become more valuable and you're directly involved with its success. Here's where it starts to get into the tokenomics. There's a liquidity boost. Half of the rewards that you allocate are used to buy the project's tokens, boosting their value and liquidity, which is just a fancy way of saying it's making it easier for everyone to buy and sell the token. Essentially, you're saying, I want part of the proceeds of the staked Ethereum to go towards providing liquidity on Uniswap or PancakeSwap or some other decentralized exchange. The decentralized decision-making is also very interesting as well. You're not just throwing money at a project and hoping for the best. The TCM approach allows you to be more involved. You get to choose where your staking rewards go, and in so doing, you're voting on the outcomes with your wallet on what projects should flourish. Now let's compare this to other crypto funding methods. Initial coin offerings or ICOs. In these situations, you're buying tokens of a new project very early on, hoping they're going to gain value and hoping that all the things that we've described that happen sort of automatically in the TCM model are manually directed by the founding team. It's a little bit like betting on a startup, but with ICOs, this can be risky, and there's often not much beyond a white paper to go on at the investment stage. Now, compared to yield farming, this involves using your own crypto to earn more crypto, like lending out your tokens to earn interest. It's profitable, but it doesn't directly support specific projects or give you a say in their development. You're just providing liquidity. Similar to that is liquidity mining. You provide liquidity to a pool, like in a decentralized exchange, like we talked about with Uniswap or PancakeSwap, and you earn fees or tokens in returns. It's more about supporting the ecosystem than specific projects, though. The TCM approach is a blend of these methods, but with a more focused impact. You're using the yield from your staking, a bit like yield farming, to directly fund projects that you care about. Unlike ICOs, you're not just buying tokens, you're actively directing funds to projects and getting their tokens in return. It's less about passive earnings and more about actively shaping which projects get funded and grow within the Ethereum ecosystem. So by comparison to other crypto funding methods, TCM stands out by combining elements of yield generation with a more direct and intentional support of specific open source projects. It's not just about earning more crypto, it's about using your crypto earnings to make strategic decisions on which projects you want to see succeed. This approach empowers you as a stakeholder in the Web3 space, allowing you to influence project growth and receive tokens from projects you believe in. Now, this TCM model appears to offer a relatively low-risk investment strategy for the stakeholder. That's not something you can say about many other funding methods. You get to preserve your principal. When you stake Ethereum as STETH in this system, your principal amount, the original Ethereum that you put in, remains intact. The focus is on utilizing the yield earnings from the staking to support projects. The risk mainly involves the yield you earn from staking. The yield is directed towards projects you choose to support, so the primary risk is on the potential opportunity cost of using this yield for future project funding instead of other investment opportunities. There are withdrawal windows. The system seems to offer a designated period for windows where you can withdraw your liquidity, which means that you can opt out and reclaim your staked Ethereum, albeit potentially subject to certain conditions and timelines. So it's not completely without counterparty risk, but it is relatively risk-free compared to other methods. So therefore, the risk is in losing yield you could have earned elsewhere, not the original Ethereum you staked, which differentiates it from the vast majority of funding methods. If applied as described, the TCM approach allows investors, which are in other words, stakers, to support projects in a relatively low risk to their principal investment. The primary cost is the yield they would have otherwise earned on their staked Ethereum, balancing that against potential gains from the project tokens they receive and the success of those projects they choose to support. As with any investment, especially in the dynamic world of crypto, it's important to understand and be informed and consider the specific details of any terms or staking investment platform. So just because something claims to be a TCM style launch does not necessarily mean that it is. You need to double check and make sure everything is audited and adheres to the rules that are described in this framework. But to summarize everything, TCM itself as a concept is a mix between crowdfunding and a staking pool, but for the Web3 world. You stake your Ethereum, choose projects to support you with your rewards, and get tokens from those projects and help to determine which projects should thrive and survive, all in a decentralized, blockchain-based, and auditable way. It's a more engaged and potentially more rewarding way to support open source projects that are building the future of the Web3 space. And another interesting innovation that's come out of the Morpheus AI project. Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.